Now, taking a closer look at Google from a shareholder's point of view, Larry Haverty is a portfolio manager at Gamco. Google is one of his top holdings with more than 60,000 shares at his firm. He says the stock has gotten extraordinarily cheap over the years. And Larry joins me now from Tampa, Florida. Larry, welcome to Bloomberg West. So what's your first reaction to these latest numbers, Larry?
Well, I think this shows tech investors at work, Emily. I have a saying, if you're living in the land of the cannibals, you better understand what they eat. And their favorite meals are margin pressure and deceleration. And they got really Thanksgiving-size helpings in both of these on the quarter. I have 37 quarters of data on Google, and this was the worst quarter in the 37 in terms of conversion of incremental revenue to incremental sales. They only converted 15% of incremental revenue to incremental operating cash flow. And considering that Google doesn't sell anything but bits, that's a pretty abysmal conversion. Now, that said, what you have to do if you're a portfolio manager, particularly at a value investing shop like ours, is take a deep breath and look at where you are. And I think the tech investors are giving people like us a carte blanche to make a lot of money. If you look at the world advertising market, and that's how Google eats, Google this year is going to take, if you take the first quarter as a prologue, probably 30% of the incremental revenue in the entire world advertising market. That's how fast they're going. They picked up $1.8 billion in this quarter. So if you annualize that, that's what the numbers add up to. Now, the thing that's the bonus on the market is if you take where they are right now in terms of the cash flow and the valuation of the stock, what's happening is that Google is selling at basically the same multiple as most major media companies, such as Disney, Viacom. It's a little premium to Time Warner. It's actually at the same multiple as CBS, if you can believe that. So you can buy Google at the same value as the companies that it's eating. And that's kind of a no-brainer. All you have to do is take a deep breath and breathe, because the vehemence from the tech analysts who follow the stock is going to be pretty overwhelming tomorrow. A lot of them are going to be lowering their estimates and beating their breasts. But Google's in the right part of the advertising business. They have tremendous technology. I'm very impressed with what they're doing in the video part of their business. And I'm confident, having watched this thing for 37 quarters, that these guys, one way or another, are smart enough to convert incremental revenue to profit.
That said, Larry, Google stock hasn't changed in several years. Doesn't that make you more inclined to look for better opportunities elsewhere?
I think unfortunately you can't go back. You can only go forward. And along with the watching the cannibals, I like to say that you can't break your back falling out of the basement. Google's generating annually about $10 billion of free cash flow. It has in the neighborhood of $34 billion of cash. A year later, that'll be $44 billion. So if you go out to 2012 with very modest cash flow assumptions, you're buying this stock at an 8 multiple. That's a 12% cash flow return. Your cash flow is going to grow. I don't think in my world there's very many stocks that are much more attractive, except ones where you might take an inductive leap and say something's going to happen that you can't see right now, like Electronic Arts, which I'm pretty excited about. But for things that I can see, that I have high confidence in, I think you have to say this quarter was a 1 in 37 outlier, that in the future, the revenues are going to grow very, very quickly, and they're going to convert much, much more of that. And when they do this, the stock will be much higher. And if the board, and this is a disease in the entire tech industry, if the board ever decides, God forbid, to do something rational like pay a dividend or buy back stock, I think the stock could very easily be over 700 very quickly.
Let's get more on Google's earnings today and new CEO Larry Page. We go back to Larry Haverty, portfolio manager at Gamco. His firm has more than 60,000 shares of Google. So Larry, in his first week as CEO, Larry Page sent out a company-wide email emphasizing how important a strong social strategy was going to be to Google. How important do you think social is for the company?
Well, I think I'm a portfolio person, not a technologist. And I think right now, as a portfolio person, I have to make decisions, Emily, on what I can see. And what I can see is the tremendous progress they're making in making search easier for users, this intelligent search. I can see the graphics on the right side, which are accelerating usage. I can see the Android activations, 350,000 a day, which are going to mean more revenue. So there's enough I can see, and I'm encouraged by the revenue growth, that I think the social is a bonus. And I am at a disadvantage here in that the principal competitors, I don't have a chance to look at their public information. Some of this stuff I think the market's getting overexcited about. I was thinking highly of Groupon 3-4 months ago, but I think Groupon is probably not worth what people thought it was. I got an offer today to do breakdancing from Groupon. So they're not exactly targeting me particularly well. So if Larry figures out social, I think it's a bonus. But after what the market did to the stock today and where the stock is versus the companies, as I said earlier, that I'm eating, I don't really need it. If social works, or if, God forbid, they start doing some financial engineering, I think the stock is really going to run. But I think these people have got to wake up, Emily. They haven't made any money for the shareholders in 4 or 5 years, and the shareholders deserve better treatment than this. And the impact on the cost that they had, I don't think was particularly well telegraphed, which is what the market was telling you today with the massive decline after market.
Speaking of Groupon, Groupon recently turned down a $6 billion offer from Google. Google reportedly offered $10 billion to buy Twitter, which would have been one way of acquiring more social capabilities. Does it concern you that Google keeps getting turned down on these big acquisitions?
Well, I think, you listen to Larry Page get on there, and for 3 or 4 minutes that were allegedly unrehearsed, and if you believe that, I have a bridge to sell you, telling people that everything was wonderful, and everything wasn't wonderful. Costs were out of control in the quarter. The quarter was the worst quarter in 37 public quarters of Google in terms of cost management. And the stock has gone nowhere for a fairly long time, while the cash flows have quadrupled or up close to 5 times. So somewhere in this company, in terms of the management of the stock price, something's lacking. And I think Mr. Page ought to spend some time trying to figure out what the shareholders want. We're not unreasonable people, Emily. But we do need a little more communication and a little more transparency, and perhaps a little more coin in our pockets.
All right, Larry Haverty, portfolio manager at Gamco. We'll see how Larry Page responds. Thanks so much for joining us.